It's been a while since I recorded anything, so I think what we will start off with is gold. There's a lot of talk on gold and where gold is headed. So I will break down first gold and then we will move on to Euro USD. So starting with gold, this is the weekly chart, and before I even get into the analysis, I just want to briefly talk about how I do the analysis, which is purely supply and demand, a bit of support and resistance. And the premise here is that a market is, making, let's say it's trending, is making higher highs, higher lows, a higher high, a higher low. And the premise is that the trend will continue until it doesn't. And what happens is that every time we have a change in market structure, what it basically means is that we have a break happening over here, and after, so the market is trending up like this, it makes a high, it makes a low, and then it breaks this high, and after a break in high we can expect a pullback. So again, if I just mark these higher highs and higher lows, this is where we are. This is a break in market structure, and again this is a break in market structure, and after a break in market structure we can expect a pullback to happen. And generally the pullback we expect it to be at least 50% or more. So if I just take the Fibonacci tool and just kind of measure this, so you can see that this is the 50% line, this is 61.8, this is 70. So we generally have a pullback if it is deep enough, and deep enough for me means it should be at least below 50%, and then we can go up. Similarly, for all these, if you go from here, this is a low and this is a high, and we see that okay, there's a pullback happens and then there's a break in structure. So this keeps happening and till the time it doesn't. And when it doesn't, then we can, so let's say now we are here and now the market comes here. This is a pullback for me and it goes up. And now let's say it does this. Now when it does this, then I know that, we've broken this low. So now we're making a lower low. Okay. And then we can expect the market to kind of do this. And the same thing. So we have a break in market structure. After that, we can expect a pullback. We have a break in market structure. After that, we can expect a pullback. And that's how the whole trend is. So this is as far as how I do my analysis is concerned. So if we look at gold right now, and we're looking at this is a weekly chart. So this is very, very bullish kind of a run that we've had, and now we've had price actually becoming bearish. So the expectation is that it's now we made a lower low, a lower high, because this high is lower than this, and then we have a lower low. So probably this is a strong high. So this is as far as the weekly is concerned. We're looking a little bit, it looks like it's bearish, and we have these demand zones from where price goes up, and we have supply zones from where price comes in. It'll kind of face some resistance over there. And all the analysis happens on multiple time frames that I do, which is based on the photon way of trading. So we have the daily chart, and if you now look at the daily chart, you can clearly see that we are making, this was a low, this was a high, then we made a lower low, and then we made a lower high, then we again we broke this is a lower low, and we expect the high to be somewhere here and then kind of go down. However, the market doesn't have to agree with whatever we're doing. It's very much possible that after this we don't really go down. It could be that we maybe kind of bounce up a little over here, and we ultimately go about breaking this, and it's more to the positive. But our job is not really to see where it is headed. It's just a notion that we have, and we react accordingly. So if we now look at the daily chart, if we just look at it from this perspective without really worrying about what's really going on, we know that the daily is bearish because we had a break in market structure. We took this out, and then we can expect a pullback. Now, till where has this pullback happened? If I just run the fib tool, we can see that this is a very, very deep pullback. This was the 50%. So we already kind of crossed 50%, 70%, almost 80%. Okay. If I just enable the 80%, you can see we are at about 80%. And from there, now we can expect this pullback to be over and continue downwards. How do we know that the pullback is over? Well, for a minimum that I want to see is a change of character. So if we take out this candle over here, then we know that there is a change of character, and that is also an internal break of structure. So if I was to mark this as the internal structure, which is just a little finer kind of a thing. So for me, this is also the internal structure, and once we kind of take this out, then I say that okay, now probably it's turned bearish and we are ready to go down. I would expect the price to then come up somewhere here, and then maybe there's a supply zone that forms here, and once it comes here, then I would be happy to look at taking shorts. So maybe there is some zone that forms here, which when the price kind of pulls up into this, I will be happy to look at taking shorts, and I put my stop loss here, and then we can target something like this. So this is a 1:5 kind of a thing in case this happens. Of course, there is no guarantee that this will happen, and we need to be reactive to how the market is. So this is as far as the daily is concerned. This is my strong high, this is my week low. Why is this a strong high? Because the daily is bearish. We expect this high to hold, and we expect this to go. So this is as far as the daily chart is concerned. Moving on to the 4-hour chart. The 4-hour chart for me is bullish. Why? Because we're playing the daily pullback. You remember the daily was we came in, we took this out, and then we kind of going up. So this is the pullback phase, and this is where the 4-hour structure has turned bullish. We had a break in structure over here, and after the break in structure, we can expect a pullback to happen. So if we just again look at the Fibonacci tool and just try to measure, I would expect the price to at least come down to this level or this level. So definitely shorts look in are more favorable. How do we know that the 4-hour has turned bearish, and why will it turn bearish? Because if we are playing the 4-hour pullback. How do we know that it has happened? Well, for a bare minimum, I want a change of character, which happened here once we took this candle out. But to give me more kind of surety, I would expect this candle to be taken out. So once that happens, so if the price actually comes in here, we can expect a bit of a bounce, and then once it kind of goes down, then I know that the H4 has turned bearish, and I would be very much interested in looking for once the price again pulls up and comes into some kind of a supply zone that forms over here, I would very much be interested in looking for shorts there, and targeting at least these equal lows, which has a lot of liquidity, I'm sure, residing below this. So something like this is what I would be looking at. Probably once we come here and we get a bounce, and then there's some candle that forms here, which actually leads to break of this structure. So this then becomes like a powerful kind of a supply zone for me, and once the price pulls in here, I would be looking at taking shorts. Now this is again and where will I look at taking shorts? Till at least these equal lows, because I also know that there would probably be a lot of liquidity residing below these equal lows. So price would definitely like to kind of pull these. So that's going to be my outlook, that once we kind of come in here, I would like to see when this candle breaks. So from a trading perspective, what I would be typically doing is I would probably put a like an alert over here. So once we cross this, then I know that we've kind of taken this out, and I can now start looking at some kind of a supply zone from where to take shorts. So that's as far as the let me just get rid of this. That's as far as the 4-hour chart is concerned. Now if you look at the M15, which is the 15-minute chart, let me just switch it on. The M15 is bearish. We are making lower low, lower high, lower low, probably a lower high. And now this is the time frame on which I will be trading. So I'm definitely looking for shorts. And like I said, we can start looking for shorts right up to here, or like we said, once we kind of break this, then something that forms over here will be more interested. But if you want to play really aggressively, just going purely by the fact that this is how we are, and probably this is a lower low that is forming over here, and probably this is the higher high. If we just run the fib tool and see where we are, then we can see that okay, we've already crossed the 50%. So yes, definitely looking for shorts over here. And once we take this out, I would be looking for some kind of a zone to form, and then again, like we discussed the same theory here too, where once we take this out, so the price is somewhere here, and once we kind of have this, and then once the price pulls up somewhere here, then I will look at taking shorts. So we have like a break-in structure happening somewhere here, and then we can if this happens, of course, if this happens, then whichever candle that led to this break-in structure, that becomes my supply zone. And once the price kind of pulls up there, then I can look at taking shots. And up to where would I want to take the shots? Well, like I said, we could go absolutely crazy and say that we are expecting at least this to happen. So that's a huge 1:10 kind of a trade. Unlikely that I would ever take this, but yes, as soon as a break-in structure happens over here, I would definitely be interested in looking for shorts. Those shorts would be, again, maybe a 1:2, or I would look over here if there is any kind of a demand zone that looks where the price is kind of is going to get attracted to, then yes, then I would look at going there. But as of now, this is what my outlook is. Of course, there is absolutely no guarantee that this happens, and we might just go absolutely ballistic here, and we go screaming up. And when that happens, then we obviously look at, okay, there's a break-in structure happening over here. Why is that break-in structure happen? Because, well, now the price has turned bullish, and if it has turned bullish, then I will be looking at probably once the price kind of comes down to some kind of a demand zone over here that might have formed while it turned bullish, then I will look at probably once price comes in here, then I'll look at taking some kind of a long over here. And where will I target that long? Well, I could look at maybe targeting this over here. So that's again like a 1:3 kind of a thing. But yeah, the whole point is that where the market is headed, we have absolutely no idea. There are indicators, there are financial news that comes which says that this is likely to happen. Whether that happens or not happens, we have absolutely no idea. Our job as traders is to just react to how the market shows its hand. So that's as far as gold is concerned.